Alright everyone, Cowboy Traders here. Welcome back to the channel for another update on Bitcoin and the market. So, like we talked about in our previous video, this week was looking like it was going to be a very important week for the markets. And in terms of all of the macro markets that we cover, the bond markets, 10-year yields, the VIX, volatility metrics, liquidity, and a few other charts that I won't pull up right now, we've been seeing continuation and we've been seeing a lot of these shocks take place in all of the markets that we cover. However, once again, we are seeing Bitcoin disregard global liquidity, which we'll talk about in a moment. We're once again seeing Bitcoin disregard what the rest of the markets are doing. So in today's video, we're going to keep it short, snappy. We're just going to fly through a couple of the charts. I just want to talk about on the higher time frames, what we've seen in the past week. Does this change anything? What's happening for Bitcoin right now, etc.? Let's just dive right into the content. So in terms of what's happened this week, we've seen a few developments in terms of the bond market. Now, the 2-year government bonds didn't quite make new all-time highs. They did have a pump, slight correction. However, 10-year government bonds have had a huge tear to the upside, pushing all the way up to 4.7%. Meaning if we come over to the yield curve and look at the 10-2, of course, 2 years haven't made new all-time highs this week. 10 years have, and they are pushing up. So we are starting to see a slight reversion back up to the upside in the yield curve. We won't spend too much time talking about the yield curve. We talk about this quite often on the channel. If you're a veteran, you know what this means. If this is the bottom for the yield curve and 10-year continues to push up faster than the 2-year can catch up, that probably means short-term risk has topped out. And once we see that reversion back up to the upside to the norm, around about the 0% yield mark, this is typically where we do see recessions take place. Now let's move on from this. Quickly wrapping up on the bond market, of course. We're also looking at the iShares TIP ETF this week. It has plunged beneath its previous bear market lows at 104.64. It came all the way down to 103.1 before pushing back up to 103.7, still having a very bearish week in terms of the bond market. Now, let's move on. Once again, veterans of the channel, you know the yield curve, you know the government bonds, you know the 10-year, you know the tips. I don't need to dive into, a deep analysis of this and explain what this means. I'm sure, most of you guys who watch, you're veterans. If you're not, you should probably subscribe to the Cowboy channel. Moving on from the bond market, which I know all of you love so much, let's move on to the volatility metrics. Now, this week has been a weird one. So in terms of, if we come over to the start of the week, actually probably makes a little bit more sense. If we come over to where we started on Monday, we were pretty much doing nothing on Monday, had a slight push up, slight push down. Then for the next few days, we started to push back up to the upside, and then worries of this US government shutdown kind of started to alleviate, which caused the VIX to start to come back to the downside on the daily time frame, beautifully retesting the bull market support bands and also beautifully retesting the daily EMA ribbons, which have just fired long. Now, if you didn't know already, in the past 8 hours or so, this news of the government shutdown has been alleviated as Biden has signed a bill which will be keeping the US government open until round about November 17. But yeah, moving on, because I don't want to talk about the politics. I just want to let you know how the politics will affect the markets. In terms of what this could mean for Monday, Tuesday, it's probably likely we see a slight correction back on the VIX. And that also probably means that we see a slight, lollygagging / slight push up to the upside, maybe on Monday for the equity markets. But then for the rest of the week, it seems like direction is clearly in the favor of the VIX. And just quickly for the DXY, once again, we're getting continuation up. We previously had resistance that was placed firmly at March 2015. This was resistance 2017, resistance 2020. We quite recently came back down to this level, and we've just held it as support, and we've been on a tear ever since. Now you can see we've just about started to open a new candle on some exchanges for the DXY, but this candle right here was the candle that we just saw for the previous week. And as you can see, we have absolutely blasted through this resistance. So it seems like a lot of these markets are already deciding their direction. The US dollar is deciding it wants to go up. The government bonds are deciding in terms of the yield they want to go higher. In terms of the iShares TIP ETF, these are going lower. A lot of clear direction has happened. Now, moving on to liquidity, which we'll briefly cover, central bank balance sheet. This is absolutely falling through the floorboards right now. In the past few weeks or so, directions are being made. Liquidity is continuing to get sucked out of this system. I see a lot of crypto, quote unquote, gurus talking about how quantitative easing is coming back and the money printer is back and liquidity is just flowing into the markets. I don't know, where these guys have, got their credentials for crypto guru from, because there's no liquidity in this market. Like, I don't know where people are getting this notion from that quantitative easing is coming back. It's not. There's no quantitative easing right now. I just want to keep it simple and just look at trading view for this video. You know, if we want, maybe in a future video, if you really want to see it, I can talk about liquidity a little bit more. Let me know in the comment section down below. I'm going to assume that you don't, because I'm going to assume that most of you just want a brief overview of the macro and mainly so focus on Bitcoin, and you don't really want to dig into Fed balance sheets and you want to dig into the latest, you know, Fed statement looking at where their money is going and is quantitative easing coming back. So I'm just going to look at the central bank balance sheet. Really, liquidity is seeping out of this market. This is quantitative tightening by definition. And also, while we're seeing new bear market lows for the central bank balance sheet, if we come over to global net liquidity, we've been kind of just talking about this for the past month or so, really honing in on the fact that we are coming right down to the previous bear market lows. And as you can see, this week, we plummeted beneath these previous bear market lows. On the daily and the weekly, there's a slight discrepancy. Nonetheless, even if we're looking at the daily now, as you can see, we are in new bear market lows for global liquidity. And one final thing I want to talk about for liquidity moving into Bitcoin is the amount of Bitcoin whales, the amount of smart money, smart liquidity, which is really in this ecosystem right now. I've been talking about on my channel how this market right now is really a retail driven market. There's no smart money, there's no institutional money, there's no smart liquidity. It is really just retail traders at this moment in time. If we're coming over to the addresses with more than 1,000 Bitcoin, something we've been waiting for the past 7 months has occurred this week. The previous bear market lows for the Bitcoin whale wallets with more than 1,000 Bitcoin was 2007. And as of this week, it dipped down to 2004, then it dipped down to 2003, and today it's sitting round about 2004. So we are in new bear market lows right now. While retail traders are celebrating this move to the upside, despite the fact that the 2023 uptrend has clearly been broken, you know, head and shoulders been broken. We quite recently filled a bullish CME gap with bearish CME gaps down at 20,000. As you can see, you know, we're really honing in on the 200-week moving average once again. We're honing in on the bull market support bands, the weekly EMA ribbons. We're retesting these regions that we were holding as support back in June, July, August. And, you know, we've obviously fallen through these and we're retesting them right now. So 28,000 for Bitcoin. You know, I've been saying the same level for the past month or so. Like, the market scenarios right now, it's just a little bit boring. We obviously saw that, you know, major move back round on the 14th of August or so, where the markets, you know, really capitulated from about 30,000 down to, you know, 25,000 very, very quickly. Ever since then, we've kind of just been slowly seeing it creep back up to these resistance levels. But, you know, once again, while retail traders are celebrating these small fry moves, retesting resistance once again, you know, the rest of the markets are not looking too good. Bond market is getting crushed. The DXY is moving up. Volatility is moving up. Liquidity is draining out of the markets. Smart money whales, they are selling, while the ratio of retail to institutional addresses are making new all-time highs. This is purely a retail-driven market. Now, this retail-driven market typically has an inverse effect on the price action, as you can see. You know, the previous bull run, at least, the previous bull run, and it makes sense to think that in the future, we're probably going to see more institutional money flow into the market. So the retail to institutional addresses, the ratio of this is going to become more prevalent in the future, in my opinion. If you think more smart money, if you think more institutional money is going to become prevalent in the Bitcoin ecosystem, then you also share this opinion. So if we're looking at this, you can see once the retail to institutional addresses ratio was going to the downside throughout 2020, 2021, this was where retail traders were not as prevalent in the market as institutional traders. I'm sure we were all witnessing it. We were all seeing, you know, every single week it seemed like a new hedge fund asset manager, you know, large corporation, you know, millionaire, billionaire was picking up Bitcoin and talking about it. This is why we saw the ratio go to the downside, as institutional addresses were overpowering the retail addresses. But right now, we're not seeing this. The retail to institutional addresses are running up. Smart money is selling as liquidity is coming to the downside on the weekly time frame for the S&P 500. You know, the previous week, we saw a really nasty bearish engulfing candle. This week, we saw continuation, slight doji candle, but still ending out in bearish territory. If we are looking at the S&P 500 right now, I still have my price targets. As you can see, for the rest of these markets, we're just trickling down. You know, we're making lower lows, lower highs, lower highs, lower lows, lower highs. It seems like, you know, the same price targets for the equities. These are the same ones I'm looking at. In the immediate short term down here, 4185, 3% drop for the S&P 500. In the higher time frames, as you can see, we are coming down to these macro price targets we've been talking about since, you know, all the way up here at this retest, 4,500. My first macro price target is down here, 4,200. The next one is down here at 4,100. We then do have touch points down here round about 4,000, also a huge psychological level that I have my eyes on. So let's keep it simple, wrap up on what's happening in crypto right now. In terms of the total cryptocurrency market cap, you know, while this is a slight eyesore that we are seeing on the total crypto market cap, having, you know, a significant rally back up to the upside, we are still, you know, still forming this same kind of head and shoulders pattern. We're still deciding, we're beneath the 200 week, the bull market support bands, weekly EMAs. On the total altcoin market, we're still seeing, you know, lower lows and lower highs across the board with this bearish retest. Bitcoin, in the past hour or so, we have got continuation. You know, last week we did have about a 3% pump to the upside. We closed out about 2.5%. You know, this week we're already on a slight move up about 3.5%. I think, you know, potentially for the next 24 hours or so, the markets might just be slightly up / sideways, like I talked about earlier with the political news that we won't dive into today. I think that could be cause for concern in terms of the VIX if you're trading something like the daily time frame. I think the VIX is likely to come down, S&P up in the next 24 to 48 hours. Maybe Bitcoin could follow suit with this a tiny bit. But in terms of what's happening with Bitcoin right now, I'm gonna make things very, very clear. If we are looking at Bitcoin on the weekly time frame, yes, we've previously talked about this ascending head and shoulders pattern, but I did talk about the possibility, although it wasn't my base case, if we do have a slight pushback up to the upside, you know, potentially coming into this major 28k resistance region, which we've drawn out on the channel for absolutely ages now. I think this box has been unchanged for about a year because we had this, you know, all the way back at these touch points over here. This could potentially just be another head and shoulders with a left shoulder head all the way up here at 32,000, retest of the neckline, and instead of this being the shoulder that we previously talked about, maybe we were just coming down to touch this neckline. Maybe we needed a pushback up to the 200 week moving average. Maybe we needed a retest of the bull market support bands, this major 28k region, and all of these oscillators over here to have a convincing retest of these levels before heading to the downside. So to wrap up today's video, in terms of what's happened in the past week, once again, you know, currently recording this video on Sunday, a lot of the markets have moved in the direction that we were talking about in our previous video. This week could deliver a massive shock to the markets. Shocks are being felt across the markets, whether you're looking at the bond market, volatility metrics, liquidity, equity markets. One thing that I do want to also very quickly show you is the IWM. The IWM, oh, not this chart over here. IWM right here is getting absolutely decimated. Small cap stocks in the stock market are getting decimated. So, you know, when I'm looking at Bitcoin right now, you know, we made a similar video 2 months ago talking about how Bitcoin is disregarding global liquidity. And when we made this previous video, Bitcoin is disregarding global liquidity, we were letting you know that we were seeing a significant divergence between Bitcoin and global liquidity. We made this video back up at 30,300. So we've obviously seen a significant move to the downside since then. I am once again here to let you know that while all of the markets that we've been talking about have been moving in the way that we've foreseen, Bitcoin is not right now doing what we've foreseen for this week. I still believe it is right around the corner. I don't believe anything has changed in the macro for Bitcoin. Of course, what we are doing, which we didn't talk about in our previous video, is retesting things like these ascending fib channels, bull market support bands, you know, 200 week moving averages at 28k, this massive resistance at 28k. And of course, global liquidity making new lows. Bitcoin is disregarding the markets, and it is also disregarding global liquidity for the second time this year, with the first time being up at these massively higher price targets. Do with that information with what you will, but that is basically what happened this week. And of course, if you watch my previous video, you know, this week could deliver a massive shock to the markets. My thoughts are still the exact same, guys. So that's all I've got for this week. Like I said, for the past 1, 2, 3, 4, 5, 6, 7, 8 weeks, we've really just been seeing, you know, slight drops down, slight drops back up. We're kind of just waiting for that next macro move to take place. But while Bitcoin is being slow, while Bitcoin's being boring for the past 2 months or so, and we haven't seen, you know, any clear direction in the macro. Well, I think we're seeing a clear direction. What I mean by that is, for example, we're not, you know, clearly breaking these macro necklines at this moment in time. However, we have just seen in the past, you know, month or so, these significant breakdowns of these very important levels the last time that Bitcoin was disregarding global liquidity. Do you think this time's going to be any different? I personally don't think so. So for today, my friends, that is all I've got. I hope you enjoyed the content. If you did, you know what to do, all that YouTube stuff. Make sure to smash that like button, leave a comment, share the videos with your friends. If you want to further support the channel, feel free to click the join button on YouTube and become a member today. Make sure to also smash that notification bell. New videos right now. There's a new video right now. It's been your boy Cowboy Trades. I'm out. Peace.